Hello, YouTubers, friends, compatriots, bootlickers, shills, debt slaves, serfs, peasants, vassals, minions. God, glad we got through that. Welcome. I'm a useful idiot, and today I want to do a companion piece to the video I did yesterday about corporate America doesn't need the middle class anymore. And another component of this is manufacturing, and it just so happens that a report came out from some IMF economists, and the basic gist of it is manufacturing is not coming back to the United States. So that's their bottom line. And so this goes hand in hand with the dissipation of the middle class in the United States. So there's a lot of rationalization that domestic energy boom, rising overseas labor costs, and future domestic rising demand will revitalize manufacturing in the United States. And the IMF economists come to the conclusion that that's not true. So that's what a lot of the speculation about future manufacturing in the United States is about. As we know, domestic energy boom with fracking and shale gas and all of that. And then, and as we've seen, the promises of a lot of job gains in that sector are very isolated, North Dakota being a notable example. And then we have rising overseas labor costs, and that's only made corporations shift around. So maybe instead of going to China, they go to Bangladesh or back to Mexico. But they're not coming back here, at least not for the time being. And then future domestic rising demand. That seems to be off in the future. Certainly the generations that are coming out of college right now are loaded with debt, moving back home, and they're not buying cars and houses. And it's hard to see how they're going to increase demand in the future. But let's get back to this report. So the economists from the IMF said in a recent report that claims of a sudden surge of manufacturing in the United States are, quote, overly optimistic and unwarranted, unquote. They went on to say that, quote, we find it unlikely for manufacturing to become a main engine of growth in the U.S., unquote. So, so much for the future in the United States for a renaissance in the manufacturing industry. And that's what this article is all about. As a recent surge over the last 5 years, is it a renaissance in manufacturing in the United States, or is it just a blip? And of course, it turns out it's just a blip. And we got another confirmation of this as well. Since 2010, and this is according to the U.S. Commerce Department, since 2010, the surge in manufacturing that we've had has failed to materialize a growth, because the growth tapered off in 2011, 2012, and 2013. So there was a little surge in 2010, and then it's been dissipating since. And so the whole theory of a manufacturing renaissance in the United States is based on this artificially created surge of 2010. And the pace of export growth tapered off as well. So those go hand in hand. So the IMF went on to say that further dollar depreciation, a U.S. energy jolt, and swelling consumer demand from India, China, and other emerging markets could gradually increase manufacturing exports over the longer term. And this doesn't really make sense, too. And the fact is they already know it in the way that sentence was written. When they talk about other emerging markets could, which means they won't, and then they use the word gradually, which means that the longer they wait, the more likely it is they might be right, 10 or 20 years. And then increasing manufacturing exports over the longer term. Notice they didn't say long term. So once again, they're stretching it out to increase the odds that they're going to be right. And the fact that the IMF is counting on further dollar depreciation in order to make manufacturing return to the United States is a little jarring, to say the least. And this U.S. energy jolt is said to be wearing off already. This fracking runs through wells very, very quickly, and this boom could end just as quickly as it began. And then I don't suspect too many people are expecting a swelling consumer demand from China and India and emerging markets, at least not in the slow global growth slowdown that we have right now and all the bubbles all over the world waiting to pop. So, but we have to bear in mind that manufacturing has been on a downward trajectory for the better part of the last 50 years. So this isn't a phenomenon that's just due to the recession or even necessarily the economic policies, failed economic policies of both Bush and Obama. At the end of World War II, more than a third of the U.S. jobs were in manufacturing, but by 2008, only 10% had jobs in manufacturing. So this has been a steady decline, and it makes sense. Manufacturing and industry got ramped up to supply for the war and supply all the other countries in the world. And then after the war, the United States had a huge whirlwind, windfall, profit bonanza. It was one of the few countries on earth that wasn't destroyed. We manufactured for the entire world through the 50s and 60s. And the honeymoon's over in many respects. And once again, this report goes on to say a depreciating dollar, falling gas prices, and declining labor costs gave a little shot to manufacturing over the last 5 years, with durable goods surging. And they're talking about in 2010. Like I say, it's been in decline since then. So there was a little artificial shot back in 2010 just because of falling gas prices, depreciating dollar, and declining labor costs, all of which, of course, are painful for the working class, the middle class, and average citizens, but created a slight boom in manufacturing. In 2010, manufacturing sector grew by 6.8%, and exports grew by 11.5%, and consumer demand increased. And that was a little blip, and it's over. And now we have the IMF saying the long-term trend is for manufacturing not to be coming back. And this is borne out by some of the other details. The fact is, and this is where I'll get into some of my analysis, the U.S. is unlikely to offset the gains made in emerging markets as companies move their operations where manufacturing is less expensive. And we see that now. Here we are supposedly 5 years into a recovery into the U.S. We're actually in the middle of a depression. And companies like GM are building plants. They're definitely expanding, but they're expanding plants in China and Mexico. You know, they're moving more plants to Mexico. China gets a little less competitive. And then we have the recent rebound. A lot of that also had to do with the fact that we're just getting back to pre-recession levels. So just reinflating that had more to do with it than the fact that there's any kind of manufacturing growth in the United States. And then, like I say, manufacturing has been declining long before the latest recession. There's no reason why that trend will not continue if that has been the trajectory for the better part of 50 years. And then we also have to factor in that we're getting all these funny numbers. We can never trust any of the numbers, so even the figures I'm throwing around here are going to be suspect, and therefore the conclusions could be even worse than what we have here. And then we also have to remember automation. Automation is now part of our culture. It's no longer science fiction. It's replacing jobs, and we have automation. And so a lot of manufacturing that they talk about coming back to the United States now, most of it's going to be automated. We're going to see more and more and more of that. So it's not going to create a middle class. And that's why I want to get back to that point, why I say this is part two of that other video. If manufacturing doesn't come back, an industry that supplied 1 in 3 jobs after World War II for creating a middle class, and the whole American dream is built on this idea to the point where by 2008 only 10%, and we're going to have less than that soon. So what kind of jobs are going to replace the robust middle class we've traditionally had in the United States? I don't really see it. So automation is going to be a big thing. Then we have falling U.S. wages. And so as wages fall in the United States to equal out with the globalization and the low wages around the world, those wages will go up in emerging markets, and seemingly they will go down. Although it's interesting, we have a dynamic right now where there's a big push to push up the minimum wage, but still that won't affect say, the manufacturing sector, which traditionally was a middle class wage, and will be was a livable wage. So even if they raise the minimum wage now, it still won't be pay traditional manufacturer level wages. So, and then we have continued global slowing, and the global slowdown right now, which China is a huge part of, is certainly going to change this whole dynamic too, and that will also decrease the need for manufacturing expansion. So if global slowdown continues, and it should, then we're going to see less need and deflation in the manufacturing sector, and that includes everything from televisions, automobiles, electronics, and things like that. We've got to the point now where, as far as I know, televisions are not even made in the United States at all. So that's how much manufacturing has shifted overseas. All these things that traditionally used to be being made by American companies are not made here, and even things that are technically manufactured in the United States are parted out all over the world. The parts shipped in here and they're manufactured. So that's it. So the IMF is saying that this is the trend for the future. And interestingly enough, there's a part of this article, there's a chart, and 1984 is when the manufacturing and service sectors realigned. And ever since then, the service sector jobs, low-wage jobs, non-livable wages are the ones that have had the upward trajectory, and the manufacturing jobs, of course, have had the downward trajectory, and the middle class disappearing. So more evidence that the middle class is disappearing. There doesn't seem to be a likelihood of a manufacturing renaissance to recreate middle class in the United States. So one more blow, and we shall see what happens. I'm a useful idiot. Don't you be one too.